Federal Reserve policy in pandemic times. What is the Federal Reserve? The Federal Reserve is America's central banking system. It was created around 1913 to have better control of the monetary system and help prevent future crises. The Federal Reserve helps combat future financial crises by acting as the nation's bank, by changing interest rates, closely monitoring various indicators, and selling treasury notes. From controlling interest rates to government debt, the Federal Reserve has a lot of power over the country and over the world and other economies. Some quick facts. The chairman of the Federal Reserve currently is Jerome Powell. Janet Yellen was before him. There are currently 12 Federal Reserve banks spread across the U.S. The interest rates themselves are particularly determined by the Federal Open Market Committee. The Federal Reserve policy is very important and the effects can be seen throughout the world. One of the main things it does is affect the stock market. The stock market is a pretty broad term that applies to all equity, futures, commodity trading exchanges, which are a congregation of buyers and sellers, which are pretty much selling securities simultaneously, arbitrage. We can see a lot of the impact on Federal Reserve policy in the 2008 financial crisis, when we saw other government economies taking a hurt after our housing market crashed. Here's an example of a T-note, T-bill. This is one that I believe is in the 80s. Before that, they actually had page-long versions. This is a more recent version. Steps being taken by the Federal Reserve. The Federal Reserve has been taking precautionary measures against COVID ever since the beginning of March, is when they really started buckling down. Instantly, they nearly cut rates to zero through the federal fund rate, hoping to spur and maintain the economic growth that we've seen over the past few years. Now, the federal fund rate, that is pretty much a benchmark indicator for interest rates across the U.S. for mainly short term, not really long term. So the fact that rates were cut to zero for the federal fund rate is pretty drastic measures. This did in fact help slow down the rapidly increasing bear markets, but it did not stop them. Past rates that could possibly be comparable. The closest thing comparable to these times could be the Spanish flu, which was around 1918 to 1920. It took over 50 billion lives, and just a couple years later, the U.S. found itself in the roaring 20s with a booming economy. The Federal Reserve was created just 5 years before the Spanish flu started. However, at the time it was created as the nation's bank, not necessarily a watchdog for the economy. Some current outlooks and interesting figures. The economy has slowly been recovering. I would expect that we can see some continuous growth at lower rates. I would expect the Federal Reserve to keep the interest rates about where they are currently and keep them low. In 2019, the average employment was around 3.5%. In April, as we started to get to the worst of it, the unemployment rate was 14%. 14, nearly 5 times higher. November 24th, just a few days ago, the Dow Jones broke 30,000, which is the highest it has ever been. This comes after medical news reports releases from Moderna and Pfizer of possible vaccines with 95% elimination trial studies. So along with that probably boosted it. Here are a couple graphs. This is the U.S. consumer spending from January to late July of this year. Here we can see around February, March, that's right around when consumers were flooding to the markets. We can see the grocery is marked in the blue. All that toilet paper and other necessities went up as hotels, transportation, entertainment, recreation, all that categories went down pretty sharply, obviously with social distancing and everything closing down. In conclusion, the Federal Reserve has done a pretty good job of keeping the economy flowing in these unprecedented times. I believe we'll continue to see low rates, possibly with one changing in the future, with gradual increases.